Good evening, ladies and gentlemen. This is CANDLESTICS Trading Frank. This is a free market update and a stock update webinar for November 28th, 2016, approximately 8:44 p.m., 8:45 p.m. Eastern Standard Time. This free webinar and market update will be uploaded to the CANDLESTICS Trading YouTube channel for others to view. And please make sure, as a reminder, that you all need to be subscribed for free on the CANDLESTICS Trading YouTube channel. You can tell your friends and fellow colleagues and anyone that you know to do that, because they can access it too and listen to some of the things that we talk about and I explain. And obviously that's open to everyone. So it's hugely beneficial, and I feel that from a referral standpoint, that's the fastest way to get referrals, when people who have some interest in the markets and understanding the dynamics of what's going on, they can hear some of the things that I explained, and many of the things that come true within a matter of days, if not sooner. So saying all that, behind you, as you guys can see the screen, we have a picture of the actual market in the form of the backstage of the stock markets, the S&P 500 E-mini futures, which basically are what happens on the back end of the S&P 500. That literally drives the markets every single day, every single week, every single month, up and down. Brian, welcome. Can you see the screen and hear the audio?
Yes.
Oh, you're clear, man. That's great. Good to have you there. Brian is a new member. He's as a matter of introduction, he's just starting to get a grasp on everything. He's new to the game of trading and investing, and I obviously wish him very well. And anyone who interacts with him when he gets time in between his busy work schedule to be in the chat room, I highly request that people interact with him. And if he has any questions and stuff, I'm obviously here to answer. But more importantly, he can make some trading buddies in the room. We have great people like Vic Axita, whenever she gets a chance to come in, who have been with us for a while, and I think are getting the grasp of what markets are all about. So saying all that, let me just go into a couple. I'm going to try to make this condensed and to the point, and keep some of my long-winded explanations, in check. Let me just explain to you a couple of very important things that's going on. Number one, this market is certainly, whichever way you slice it or dice it, is on a bullish uptrend. Till that trend changes, what we call a trend change, it will, in between tactical dips, keep on going higher. Cognitive bias, which I've talked about a lot, which in simple English means what your brain thinks and what your biases are in the way you look at life or trading, which are pretty much the same thing in my opinion. I've been doing this for a while. You can cut people, you can basically separate people in two different groups. People who are pessimistic about life and think that every day is going to be a terrible day and the future is going to be bad, and the good old days, which is completely a bogus statement to start with. These are the best days in your life, for a simple reason: you're alive. And I don't mean that in a funny way, okay? So the best days of your life are every day that you can breathe and you can walk and you can talk and you can move your hands and you can brush your teeth in the morning. Every day is a great day from that respect. So a lot of people keep on talking about the good old days. I don't know what the good old days are, because from a financial perspective, when the market was crashing and burning all the way back down, going back to 2009, right here, when the S&P hit the devil's number of 666, and I was working on Wall Street at that time. Trust me, it wasn't a good old day. As the markets kept on climbing higher, you kept on hearing about the good old days. So if the good old days were the March 9th of 2009, that's what the exact date was, by the way, I still remember that, then what the heck is a good old days, okay? So you got to, the trading and investing is basically recalibrating your mental status as to how you think about things. I keep on sometimes posting this very, what I consider to be the motto of my life, which is there are no perfect moments. You know, there are no perfect moments. You gotta take whatever's in front of you, and that doesn't mean you have to be bullish all the time, but it simply means whatever is in front of you, you have to take it and you have to make the best out of it. Because if you keep on waiting for the perfect moments, which there have been many, 2009 was a perfect moment. Did you ever hear anybody tell you that you should buy the crap out of the market? Not a single person. Believe me. Yes, there were one or two major analysts like Tom Lee. Okay? Tom Lee, now he's with Fundstrat. He was JP Morgan at that time. Brilliant, brilliant gentleman who is still bullish on the markets on a tactical basis. Said, yes, buy the market. We get big, big fat corrections all the way from, and history of the markets is very, very important. Very important, because that reminds you and teaches you and sort of gives you the tools that you need to understand what's going on. So here it was, look at the date up here, okay, between May of 2011 till about October of 2011. Wow, you know, like 5 months, end of the world, right? They were calling for the end of the world. Another humongous buying opportunity. Let's fast forward. This January. Oh, sorry, August of 2015. The taper tantrum. Like, oh my God, the Fed's going to completely walk away from buying mortgage bonds and QE. We stopped QE. Most of you don't really even remember. But I used to post this table of the days that the Fed was going to come in for open market operations and basically unleash the power of the quantitative easing. In other words, the days they were buying the bonds in a heavy. They used to post that table. I used to post that. Public information, obviously, or from the Federal Market Committee, Federal Reserve Board. And great days to buy. And of course, not the days then, but before that. They said, oh my God, the market's going to completely fall apart. It's over. You know, the Fed stopped buying bonds. There's no more printing money. Garbage. Absolute garbage. Where was the market? Around 1800. You can see that on the right. S&P, you know, the E-minis, 1800. You know, whenever I'm talking about the E-minis, as you know by now, and I know I keep on repeating myself, but should know it, should add roughly about 5, 6, 7 points to it to arrive at the actual number for the S&P 500. Okay, so give or take, you have, you know, they said the world is over. Oh, great, the world wasn't over, because from 1800 we rose, we dipped again, and this was as recently as January and February of 2016. Wow, we forget. We were down in the 1800s. We were below 1800 at one point, slightly, right there. And hold on one second. And this was as recently as beginning of this year. You know, in human time, a month might seem like an eternity. In cosmic time, it means nothing. What's a year? A billion years from here to the to Mars is nothing, right? Well, I don't want to get into that, but the point is that we as humans always measure time in minutes, in hours, in days. Well, It was just a few months ago, guys. We were at 1,800. The Dow was at 16,000. 16,000 Dow Jones Industrial Average. They said the war was over. It was over, you know. That was it. It was the big, big drop. What happened? On February 9, 2016. February 9. I still remember that. March 9th, 2009. February 9th. Something about the 9th, right? Look at the market. Now, this is a monthly chart, okay? So it's giving you a broader perspective. While we all humans act like monkeys on a hot tin roof. You know that. I do that too sometimes. Of course I do. I do it less than others, but I still do. It's called MOHTR. Monkeys on a hot tin roof. Some of you are like baboons on a wild streak. Get all bent out of shape. Some of you, not all of you. Okay? My job is to keep everyone in some sort of even mental health so that they can keep looking at the bigger picture of where we're going and stop listening to the demons in all your heads. Like, oh my God, I'm going to wake up. We're going to be down 500 points. It's all over. CNBC saying it's over. Stock to its guys and other forums saying, oh my God, this is the start of the big one. Very exciting. Doesn't excite me. Look at the monthly picture of what's going on. I leave it up to you guys to decide what you want to do. Cognitive bias, this is your own individual biases based on your baggage of what you've done in the markets, based on how you look at life, based on if you think that if Trump won, you should want to move to Congo or Canada or Cameroon or New Zealand or whatever. You know, you heard a lot about that, right? The Canadian immigration site was down on the night of the election. I'm thinking to myself, what the hell are people doing? They want to leave the United States of America to go to another country? That's great. But, you know, that's what people do. They do the same thing with markets. So here was January and February. Here was other big dip in September, in June. Can somebody tell me what this big dip, with this big candle was in June, which turned into a huge reversal candle, which was one of the biggest cataclysmic events of, and when you look at the bigger picture, obviously everything looks small. But at that time, it was like, oh my God, it's all over. What was this? Can somebody tell me?
Brexit.
Yes, Brexit. Thank you very much. Thank you. That's great. So this was Brexit. In hindsight, when you look back at it, it looked like nothing, right? But that was a 1,000-point drop, 960 Dow points. It's not a joke. It looked like it was going to go lower. I expected the market to basically go a little bit lower, around 1950 or so. I wasn't like a complete dogmatic bear, but technically it looked down. And look what happened. Then we kept on climbing. Big box, month of July. And I walk people through it. Don't short the month of July, especially July 4th weekend and all that good stuff. And then we have a consolidation. That consolidation lasted August. August 15th, we hit a high of 2192.31. That's on the E-minis. So add a couple of points to that. The highs in July were around 2195 to 2196 on the S&P 500. Then we had another consolidation, down then up, but still red candles in September. October comes November. Now, if I showed this to somebody who has no idea what the political or economic events were, they'd be like, wow, this chart looks great. Look at that fat reversal hammer. Big fat box. Billions and billions of dollars that went into the market after hitting the 2027 level and maybe a little bit lower after hours. And what was this, guys? No answer? Wow. I
Bad
need
luck is it didn't happen in the real
what
time when we trade market.
that's not my question, Vic. My question
Well,
was a simple question. What was this event that caused the market to get down back towards the low 2000s?
it was Trump
Exactly.
election.
Exactly. So guys got to be quick on the trigger, you know? It's like a pop quiz. You should be like, yeah, it was elections. It was what happened on Tuesday night. The world's ending. Trump won. It's over. And then this. So saying all that, when you look at this chart, and let me zoom it back a little bit, because we have to in life. Believe me when I tell you it's the same thing when trading. Have to look at the bigger picture. We have to. So when we look at the monthly charts, there's monthly, okay? And I'm going to go all the way back to 2009. This is a firecracker. This is what you see in Chinatown when you go there once a year when they have the big dragon festival. This is those firecrackers you buy for $5, made in China, of course, which you just throw out on because they let you, you know, put those things on the ground and everyone's happy. The dragon parade is going on. This is what it looks like. Now, when you look at this hue, which from a technical standpoint, when you look at this big, big reversal candle, does it really look like the market's going to completely crash and burn? I just want a straightforward answer. Forget your biases. Forget if you want to move to Canada or Cameroon or Congo or wherever you want to move to, okay, because Trump is in power. Forget all that. Just look at that and tell me a yes or a no. Does this look like the market's about to crash? It takes this long for people to answer? I love it.
No, it doesn't.
Obviously, it doesn't. It's so obvious that people have to think about the answer. That people actually should think about the answer. I love it. I love it. Hey, look, I'm no genius, man. I'm just somebody who tries to simplify life because life is way too complicated for us to really overcomplicate it. To keep it simple, stupid. You know, the simple principle, the KISS principle. And please, everyone, relax. I'm not going to go into my tough stage and scold everyone because they don't look at charts and this and that. You know, I'm not going to apologize for that session, which I did, because I did that to help people. But I'm not going to go into that tonight. So please, you can put your guard down. All right? This is the real deal that you get at Clueless Day Trading. You get the real raw stuff, not some pampered, hold your hand, kind of softy, you know, stuff. This is the real deal. So when you look at this, this market's not going to crash and burn. We are going higher. Now, saying all that, it doesn't mean we have to go higher every day. We were down 54 points today after 15 days or something like that. And I felt the fear in the room. And we had huge winners. Selective, of course. We have, and I will put it out there, we had Google up huge. Amazon was down. Whoa, real scary. We're going to talk about that later. Well, actually, what's to talk about? All my charts are there. I showed everything repeatedly. It's a buy. And it's a tactical buy. So saying all that, the thing that I want you all to keep in mind is once in a while, go back and look what the markets are doing when you cut out all the noise, not all the noise, some of the noise, and you look to see what the markets are doing on a monthly basis. Here is what I find, and this is something I find about myself too. I'm to blame too. We think about the market in terms of, we think about the markets, what do you call, in terms of as human beings, I found this out a long time ago, on Wall Street, as I used to deal with clients, institutional and high retail net worth clients. I mean, really high need retail net worth clients. That they all talked about what they saw, what their feelings were about where the markets are going. But every time the markets were down 50 points or 100 points, they started doing the MOHTR routine. Traders do it in a more magnified basis. Okay? Monkey on a hot tin roof. So what does that make us? It makes us do really stupid things. Really stupid things. Now, it doesn't mean that you have to buy something and not look at it for 3 months, but then at the same time, when you look at charts like this, maybe you got to do something like that. Maybe a small portion of your portfolio should be projected out to what's going to happen by the end of the year. January is going to be a correction. No question about it. It is purely for tax reasons. Okay? Anyone know about what the wash sale is? No? What the wash sale rule? None of you? Not even Exita does. Wow, I love it. What about lawyers like Exita, you already gave the answer. I was going to quiz Mr. Lawyer, JB there for that answer. Okay? I'm not picking on you, JB, man. You should know that. The watch sale is if you sell something within 30 days, right? You can buy, if you sell something after 30 days, you can buy it back without a tax ramification. You want to know the exact definition of a wash sale, then you should just look it up. You need to know that because it has a profound impact on financial markets in the US. So what happens is a lot of taxation on an annual basis. For example, if you're up on something a lot, okay, and you sell it within the tax year of, let's say, this is nothing to do with wash sale, just in general, of 2016, you got to pay taxes on it in 2017. Everyone understand that? Yes? No?
Yes.
Okay. So traders don't seem to understand that, a lot of them. So what happens is what the big money, I'm talking big money, the guys who are putting out like, they got $30 million, in Amazon. Now, believe me, there's enough guys who have that. So the point is, they will defer the sale till fill in the blank. Till when? Answer, please. Anyone? They'll defer the sale till when? Mr. Lawyer, JB, how about an answer? Brian?
New year till January.
I'm sorry?
If they're selling, it would be till the new year.
Exactly. That's why you have the January effect. The first part of January, all the atypical lemmings sell to take some profits down. And then they can rebuy it back within 30 days. So that they comply with the wash sale rule. So that's why you always have a powerful correction, a tactical correction on the first part of January. Now, if something else comes by, that extends into February, just the way it happened here. You think because I do this to work with all my members and traders, I know it. In January and February, you guys were, not you guys, it was like, we got a churn of new people, a lot of the older people still here, some of the newer ones come and go, just the nature of the business, freaking out. End of the world scenario, 1800, we're going to 1500. I thought we were going to come down and, if at one point, if this continued, then we would have basically tested the multi-year breakout level, which is at 1600. And you heard a lot of that. I didn't go that far. 1600. If we ever get to 1600, S&P 500, which is 600 points from where we are right now, that's a 4,000 plus drop on the Dow Jones Industrial Average. You guys better be prepared. Do you know what you're going to do at that point? Because that was the level that the markets broke out at. That was the level that the markets broke out on June of 2013, when you all were 3.5 years younger. Maybe 3.5 years prettier than you are right now. So if you get down to the level from a tactical standpoint, multi-year, what do you think is going to happen? I want to hear from you guys. I mean, come on. I shouldn't be the only one doing the talking. No one?
It should bounce off it.
Yeah. That's one answer.
DTFD.
Here's the question again. Okay, maybe there's a lapse on the internet questions that I ask, but I find it pretty amazing that, you know, that it takes so long for people to answer a simple question. I mean, honestly, you get down to 1600, you buy the market like it's never tomorrow. That is the biggest lottery ticket you need, not the guy from Tennessee who just won the $400 million lottery. Because you get a tactical bounce of 200 S&P points that equates to roughly 1,400 Dow points within a matter of days, just the way we got things like this happen. Of course, I'm just giving you the bigger picture. If we get to 1,600, by the time we fall to 1,600, there won't be any buyers left. Of course, we won't be sitting around in our trading club on a 4,000 point drop and saying, oh yeah, we're just going to sit there. It's going to be a huge money-making opportunity. It's not going to happen in one day, but it can happen. It can happen possibly after 2017, in my opinion. Remember, markets move on hope. There's a lot of hope right now, and justifiably so. What if the hope isn't delivered? Then comes the, I'm pissed at you. I hate you, Mr. President, BS. Okay? You didn't deliver what you promised. It's human life. That's when the markets are going to do what they're going to do. Okay? So that's a bigger picture. But let's not go there, because I don't think human brains are that far-sighted to look at pictures like that. So let's focus on what I was talking about before. Just want to show you kind of a glimpse on what can happen. So here we have a 1800 level, which is its biggest solid floor in the market. People freak out in the room, on StockTwits and other forums, on a 100-point drop in the market. If we went to 1800, we're talking about a 2,400-point drop in the market. So let's look to see, let's try to keep ourselves as normal as possible, right? We just talk about what's happening now. I just love showing the bigger picture because most people don't see the bigger picture. Because as traders, and I'm guilty of that too, we are all a bunch of short-sighted monkeys on hot tin roofs. If something doesn't work out in 2 days, we think the world's ending. And guess what we do in return? We give away valuable option positions, we give away valuable shares, and then we regret that we should have held them. This happens all the time. It's time to stop it. It's time to stop it. We are down 1.7%, okay, on Amazon. That's 1.7%, not 17%. And people are freaking out. I'm not blaming anyone. I'm just telling you the truth. We're down 0.28% on the Dow Jones Industrial Average. People are freaking out. We are down 0.56%. These are 0.5% we're talking about. On the NASDAQ Composite, people are freaking out. S&P 500, same, down 0.5%. Russell 2000, which went up, forget it. All of us in one way or the other. I did okay. I could have done a lot more. I showed where it was. I showed where I think it might go. It went beyond that. All of you missed out on a lifetime opportunity. You don't need to play the lotto, buy $2 Mega Million, Powerball tickets. You could have done that on the Russell 2000. Okay, you could have done that on the RUT. You think this is a joke? Now, I'm not some, BS service guy who said, oh, I did the whole thing and you guys all suck. No, I took portions of it. Should have held it. And they're still going higher. It's still going higher. So here was the Russell 2000, and all you could hear in the media was it's the worst performing index, blah, blah, blah. I always had a term that when I used to post on Stock Twist, and I still do a little bit, the U.S. small cap infantry rises to the challenge. It reminds me of the Marines fighting out there to save other people's, okay, and their countries, and getting huge, getting hit. And some of you might know, U.S. history. Well, you should know because our boys are dying out there. The Battle of Fallujah. Marines took a huge hit, and then they fought back like, I'm not even say the words, okay? And they won. So I used to post, this is the Battle of Fallujah. Well, that's in Iraq, by the way, just some of you might not know. The U.S. small cap growth, which is the bedrock of the U.S. economy, always fights back. Always fights back. And it did. It fought back so hard that the gurus out there on Stock Twits and other forums and everywhere are just flabbergasted. They're like, holy cow, oh, it can't happen. Well, I'll tell you why it can happen. I'll explain that in a few minutes. It can happen a lot more. Because not just the Trump election a win, the overall underlying U.S. economy is getting stronger. And when it gets stronger, the Russell 2000 gets stronger because the Russell 2000 is geared inwards towards the U.S. economy. You see strong consumer spending. You see strong growth on the housing sector. You see strong growth in domestic consumption in durable goods, fridges, TVs, stuff like that, right? Lawnmowers, maybe. Okay? The Russell 2000 benefits. And I couldn't hear one single guy ever tell me that the Russell 2000 was going to higher. Or they were like, oh my God, this is the end of the story. It's the worst performing laggard. And this is what happens. The Russell 2000, ladies and gentlemen, is up more than 12% for the year. The overall indices are only up about 5%. And I mean only up about 5%. If you ask the average person out there in the street, first of all, they don't even know what the heck's going on with the stock markets. But you say, oh, the stock market is going a lot higher. Maybe it's up more than 10%. It's up 5%. The Dow Jones Industrial Average overall is up a little bit more than that. And the Russell 2000 is up in double digits. Okay, so let me just show a couple of things here. Very simple stuff, because tonight I just want to keep it simple. Because complicated stuff that I keep on putting out there and a lot of good stuff, you know what, seems to blow over people's head. But anyway, so here we were at 1300 on the Russell 2000 on June of 2015. June of 2015. Here on November of 2015. We just got back to June of 2015. Guys, wake up. Ladies, wake up. If I showed this to somebody who has no idea about the stock market, are they going to, and I said, oh wow, is this like really overextended? Does it really look overextended? From the levels that you should be looking at as tactical traders, not like every other moron out on the street. Seriously, you got to look at it as a technician. So as a technician, you should be looking at the fact that this was the big this is it. So we were here in June of 2015, and in November 2015 we broke out of the June 2015 move. So how are we overextended? Oh yeah, they say, oh, we were down at 937, 1,000, and now we're at 1,300. It's up more than 30%. Whoopee. Who bought these lows? Nobody. All you could hear, the gurus and everyone out there, the smart guys all telling you, oh, you can't touch the Russell 2000, it's over. Okay, fabulous. Fantastic. Keep on listening to CNBC and all your StockTwits guys that you follow and all the sweepers who are real market technicians, but nothing but a bunch of lemmings and chasers. Yeah, they're helpful because they kind of give us an idea of where the money's flowing after the fact. After the fact, not before the fact. Remember, predictive forecasting is very difficult business. That's what I do every single day. It's tough because predictive forecasting is when you got to kind of swallow your fear, look at the charts, look at all the technicals and blah, 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 all the stuff that I put out there and say, okay, I'm getting in there. It's not meant to work immediately. It's not meant to work like, oh, I bought here and now it's going to go here. Of course it does. If you did things like Google and a bunch of other stocks, that's a different story. But in general, predictive forecasting means you're going to go through a little bit of, you got a dollar cost average, this and that, and then bang, this is where you sell, and the lemmings get in here. I'm not talking about Russell 2000, I'm saying in general. So the lemmings get about, I'm sure all of you know what lemmings are, right? They're rats. Okay, so the point is, and the chasers, they're nothing. They're a bunch of chasers. There's an old saying in the business and in life. If you're not the lead dog, all you're doing is looking at the every other dog's butts. Seriously. You know, I forget the name, you know, the big out in the North Pole, you know, Alaska, when they have the dog races with the sleds. All right. So if you're not the lead dog, you're looking at the other dogs, you know what? Posterior, behind. It's the same thing with traders. Do you want to keep on looking at the posterior, or do you want to be the lion and be up front? And yes, make some sacrifice along the way, i.e. dollar cost average. Dollar cost average. There is never a moment where the best trades in the world, and I mean that, that's not something, I live it every day, are the ones where you buy, it slips a little bit, the technical indicators are all kind of shaping up, and then bang, shooting fish in a barrel within 24 to 48 hours, if not a little bit longer. Except the lemmings get in here, they get all excited, and then bang, comes the consolidation channel, and they lose, and they sell here. Many of you have done that repeatedly. But thanks to my hard work, you don't do it that much anymore, I'm sure. The best trades in the world are the ones where you have to be disciplined to accumulate shares or options on the call side or even the put side, depending which way we're trading, and then selling at the appropriate time as everyone else rushes in. People say the big boys. You are the big boys and girls, ladies and gentlemen. If you act like one, there are no big boys and girls. If the big boys were all so great, then why are 80% to 90% of mutual funds and hedge funds losing money? They're big boys. They're shutting down the doors. 30% of medium-sized hedge funds within the past 12 months have shut down their doors. They're the big boys. 100 million to 500 million, 3 billion. They can't do it because they are big-time lemmings and chasers. They go into a macro trade such as I'm buying the, such as, oh, let's put all the money into emerging markets. Let's buy, you know, let's just invest in Burma. Let's invest in India. That's still an emerging market. Solid economy, but still an emerging market. Let's invest in Cambodia, Vietnam, to the point where they're just like, oh my God, it's like, that's the best place in the world to be. As Americans, we all tend to fall in love with the world without realizing how great we are, our economy is, how great our companies are doing despite difficult circumstances. We are self-loathing people. We always think we're the worst. Well, it's high time we get out of that mode. Okay, I've always said that. Americans don't even understand how good we have it. This is your emerging markets, ladies and gentlemen. Since, and you've heard this in the news, but now you see it in actual pictures, this is the state of the emerging markets ETF since elections, right here, day of the elections, November 8th. I love it. Not because I don't like emerging markets. We need them. We need to sell our goods to them. But my God, these fund managers and lemmings and chasers from my previous firms that I worked for, so big money, stupid money. They ran into it like there was nobody's business. Comes the U.S. market rally, and look where they are from. They just collapsed. That's a lot of collapse. This is an ETF, not individual stock. So what I'm getting at is now they're starting to come up. But what is this pattern called? Once you drop really hard and then you create a channel like this, somebody please enlighten me what that pattern is called. And not the newer ones, but people who work with me for a while, they should know what that pattern is called.
Bear flag.
I'm sorry, one person at a time. Go ahead.
A bear flag.
Who said that?
Sue.
Thank you, Sue. Perfect. Love it. Absolutely. That's a total bear flag. Now, a bear flag is broken if it can get above the uptrend line, right? We know that. I've shown that on charts, you know. This is a bear flag. What does a bear flag do, Sue? Generally.
You could do a back test a broken uptrend line and then break down again.
Yes. Is this Sushi?
Yes.
Oh, hi. How are you? Okay. Yeah, exactly. That's a outside probability. An inside technical the general technical probability, higher probability, is a bear flag breaks down. This is what's going to happen with emerging markets. This is a bear flag, like Sue said correctly. We might test this thing here and climb above only if the US dollar breaks hard. Remember, the stronger US dollar makes, and I've explained this before, I'll explain it again. A stronger US dollar makes all the global loans, all the sovereign loans by emerging markets far more expensive to pay, right? Because everyone borrows in dollars. The dollar is still king, believe me. It's not the Chinese yuan. It's not the Japanese yen. It is not the Swiss franc. Well, close to it, but not really. Okay? It is the US dollar that dominates. Try going and taking in a couple of months off and going visiting the rest of the world. And I've traveled extensively, I know. The US dollar is king. You show that greenback, people take it. And it doesn't matter whether politically they like you or not. All right? Believe me when I tell you. It's all the garbage that you hear that they hate Americans and they hate the U.S. economy. All bullcrap. When it comes to the greenback, they'll love us. Even the North Koreans, which are the biggest counterfeiters of U.S. dollars. You want to get a nice fake U.S. $100 bill? You either find it in Wisconsin or in North Korea. That's a joke for JB, all right? So the bottom line is that from a bear flag standpoint, this is a bear flag, and generally it'll break down. So what's going to happen? This is what's going to happen with this EM, and you can mark it here because this video will be uploaded. It'll come down here. It'll create a double bottom. It will possibly slip a little bit more, somewhere in that 33 range. There's a gap here. You can see there's a gap here. It's all in the charts. This gap is somewhere around 32.5. So these are the major buy points. Once it gets down in this range, it will bounce hard. Bounce hard. Now, it doesn't mean it's going to probably take out the highs, but it's going to bounce really hard. And all these emerging market stocks, including Chinese stocks, are going to go through the roof. That's exactly what's going to happen. Pure technicals. All right. So let's get back to the U.S. markets. Here is something I want to explain to people very clearly. Options traders. Okay. Many of you are options traders. Well, most of you are. And these are the three things you really have to apply. You get a thing like Google. Yes, I charted it last week, and I put it out there. I don't know if I have that chart directly in front of me. Oh yeah, okay. So here was the chart, and I put it out there, and I said this thing is looking really solid. It was actually picture perfect. 1 second, extend to the right. Okay. So I was looking, I showed multiple versions of the chart. As you know, I use many different platforms to show you guys, ladies and gentlemen, all the different formats of how you can look at things and act on it. And 1 second. Okay. So here we were buying the stock, right? This was where we were buying the stock, somewhere around 772, 777. And the stock goes to almost $800. I said $800. Now, I projected it to go to 793, possibly an overshoot. That's exactly what happened. So what does that bring to mind? What brings to mind is that you see something moving that fast, that furious. You got to scale out of profits. You got to add on the initial spurt, which I was watching, and I said buy. Look at what happened today. Can anyone tell me why Google did this today? Anyone? You don't have to be right, but can anyone tell me why Google did this? Like went out of control today? What, they just took over Amazon's inventory and sold it in the black market? Like, hey, I got a nice, 90-inch Samsung TV. I'll give it to you for $200. Just buy it from Google. I mean, that's not what happened. So what happened here? That Google just went ballistic. The stock opened here, right? Just kept it like a real breath thrust. You know the term I use? It's like massive, bang, bang, bang. You just need to, you could buy here, you could buy here, you could buy here. I said buy. I said buy after the first candle. You gotta respect candle movements. Why do you think this happened? Anyone? Just attempt an answer maybe? Everyone fall asleep or what?
A lot of volume, a lot of volume on those candles.
No, I know, but I'm talking about, anyone know the reason why it happened? I'm not testing anyone. I'm just asking. Does anyone know the reason why Google went ballistic today? Anyone? Vic? I know a lot of you made some decent money on it. No?
Not really, Frank.
Okay.
Actually, I
Okay.
sold it whatever the price I want to, but
Okay, that's not my question. Okay, yeah, I'm not asking where you sold it. I knew you made money on it. You know, point is, Google was a huge. It was up more than 300%. The 800 calls that I projected. So don't worry about that. Here's the answer. At the time this was happening, and wake up to reality. I had no clue. I could not find any reason why the stock, other than technical reasons why it was going higher. The point I want to prove is if you see things like that, you don't have to look for news. You have to just participate. So the truth of the matter is, the news came out later. Google restructures the cloud sales team. Whoopee, great. Google Pixel might generate 3.8 billion in revenue. That came out after 11:30. When did the stock peak? At 10:30. So all the news came out afterwards. It's a very important lesson I want all of you to learn. Tactical, technical charting works. You wait around for news, you're going to be too late, because all the so-called news on Google that they might that they're restructuring their cloud business. Well, Google Cloud is pretty big. Yeah. Okay. And the news that their Pixel, Google Pixel, I guess that's their stupid phone, right? Yeah, the Pixel smartphone. Sounds like a Disney phone. They should sell it to Disney. So the Pixel phone could generate 3.8 billion revenue. All came after the stock hit $800. So it's a very important lesson I want you all to understand, because most of you don't think like a crazy robot or a methodical robot. It took me years to do it. And that's why I might sound weird sometimes, but it works. There's a saying in the business. It says, thank me after the trade is, the ultimate compliment in life is when everyone says congratulations after the trade is done and they're not in it. Think about that, what I just said, okay? They said great trade. Well, how about being in it before thing? No thanks and no compliments are needed in this business. Follow the technicals. Not easy, but when you see something like that, you see the first fat candle on any stock right off the morning bell. Don't question why. Yours is to just do the trade. Anyone know who Alfred E. Tennyson was? Anyone who's somewhat studied literature? Or JB, you're an educated guy. Alfred E. Tennyson? Somebody Google quickly, like, oh, who's Alfred E. Tennyson? He was a British author? Yes? No? Okay, great.
Yes. Well, by Lord Tennyson.
Thank you very much. There's this famous saying about the Crimean War where British soldiers died on the ambush. It says, yours is not to question why, but to do and die. Well, yours as a trader is not to question why. When you look at technicals, you do trade and take your trades off and win. Stop questioning technicals all the time. Yours is not to question why, to do and die is Alfred E. Tennyson's ode to British soldiers who died in the Crimean War when they were stuck in a ravine and got slaughtered. But for traders, when you see candles like this, do not question anything. It's the most valuable piece of advice you will ever learn in your life. That's why it doesn't matter how long it lasts. It might last, half an hour. It might last an hour. It might last a day. Whatever. It's money being printed. It doesn't mean you have to go berserk, but whenever you see an acceleration candle like this, you have to get in there. I've showed this repeatedly. Please try to follow it next time. Okay. Couple of longer term charts here. Here is, let me move on. Stop script. Get bookmarks out. Okay. No personal stuff up there, so you won't find out if I'm, sitting on Mars or sitting in Jersey City. So here is a chart of your good old market. So what we have here is a very defined chart, and I show this once in a while. We have this was today. Okay, so that was certainly a bearish engulfing on the daily. We have points of engagement primarily at around the 2193 level. Okay, 2193 level. Oh, I wanted, before I lose my train of thought, sorry, I really need to show you guys all that, aside from all that. Actually, let me just quickly cover Amazon. Or when I look at the bigger picture of Amazon, for example, this is not that bigger picture. This is actually a trading picture on the 1 hour, and I've shown some multiple charts on it. It could turn out to be an extremely profitable trade. I mean, extremely profitable. Now, that doesn't depend on the fact whether or not they're going to release numbers for Cyber Monday and whether it's going to be good or bad. Everyone knows that. I agree with that. I would love Amazon Cyber Monday sales to be a gazillion trillion dollars. But we can't rely on that. Only thing we can rely on is pure technicals. So Amazon had a nice corrective action from the highs of 786 and the highs of 791, which I called all the way from the 711, 715 bottom, and no one can dispute me on that. It was thrust after thrust, impulse wave after impulse wave, and boom. I can assure you that 99% of you did not catch the whole wave. Neither did I. But I took bits and pieces of the middle very well. I can assure you that 80% of you or 90% of you listening here tonight did not even catch bits and pieces of the middle. Yes or no? How about
I caught it.
You caught a good bunch of it? Okay, that's good to know.
Yeah.
But in general, people didn't. I know when people, what they do or not. I don't need to peek into their P&Ls to see it. So bottom line is we have a nice corrective action, giving us another chance for a tactical profitable move. And I know you're with me on Corey on that. I mean, Corey, you're with me on that. So bottom line is all I try to do, as I've explained to everyone, is all the time, is try to put this structure into place. So putting this structure into place, this is certainly a consolidation channel. And so far it's holding. All the lines are holding. You have a 100-day moving average right here. You have a channel low at around 760. And you have a downtrend line all the way from the 800 level that it broke out of back on Monday, past Monday, when the stock just surged and people couldn't believe how fast it was moving. So the same people who never made money on this move up are the same people who are saying, oh my God, this stock's going to crash and burn. It gets boring. Really boring to keep on hearing the same old statements. Saying all that, here's the technical part. If the stock 750, buy with all hands down, because that'll be a retest of the DT line, as I like to say, right? The downtrend line. And this applies to any stocks out there. So the DT line breakout, which a majority of people missed, was here. So DT line retest would be around 750 to 752. Is it possible Amazon hit 750 to 752? Absolutely. I don't write out anything. Now, saying all that, the options are going to get cheaper. So you have to, the trade management aspect of the thing is you can't lump into it like right away and say, okay, I have $1,000, I have $3,000, I have $500. I'm just going to basically just lump into it all go. No, somehow or the other, you got to manage your trade. That's the toughest part of the business. And we all know that. We all know that. Okay. So the point is, that's not a one day, one session answer. So point is that if Amazon holds here on this channel, which is around the 760, 762 level, the stock should technically bounce up to about 780. Somebody will say, oh my God, you know, somebody who has no idea about trading has never seen 100, 150% type of return on their money on trades. They'll be like, oh yeah, that's great, man. You know, you should stay away from that, whatever you're you know, smoking. And you know, in trading, it doesn't work like that. You guys have seen that. So the bottom line is the upper end of that range is 780. So the most optimal scenario would be the stock gets to 780 and it gets there fast. It doesn't mean it has to happen within the first hour tomorrow or the second hour. It should happen before the options expire, which is on Friday. But so far, remember one thing. It is nothing but a large, it is this is a pure consolidation move. You can call it a cup and handle too. A big cup and a handle being formed, and that's your handle. Big cup, handle. Cup and handles do work, and that handle should, if the stock is still on an uptrend, break out. Now Corey did mention we could get 800 by Friday. He's right. We could get 800 by Friday. When the stock was at 700, nobody said it could get 800 other than my projections, which said, okay, it'll get to 750, at least retest, blah, blah, blah. And then if it gets there, it'll go to 800. And it did. It went to 790 and change. So remember one thing about trading. As you do this more and more, you will see stranger things that you have ever seen in your life. Just the way when the markets fell apart and were down almost 1,000 points after elections, after hours, and then turned around and went up 1,000 points. This is not things that you can sit there and explain to your wife or your husband and say, you know what? The market was down 1,000 and went up 1,000. 2,000 points in 10 trading days? You cannot explain to the average person. That's the reason why. And this is from a behavioral standpoint. I do have to put this in. Traders have to be a little bit nutty. You have to be nutty in a good way. It doesn't mean you have to smash screens. We were at Thanksgiving at a friend's place, and there's this Russian guy there. He goes, my friend is a big-time trader. I said, yeah, he's a Russian trader, so I know what he does. He breaks screens, right? The guy started laughing. He goes, he had 10 flat screens in the back because every day or every hour, and he must have been a wild, you know, he's trading with big money. He lost money, he smashed his screen. It's like those drummers from Led Zeppelin or, you know, or the Doors, you know, or whatever, Rolling Stones, who kept on, like, you know, completely hammered. So he completely, you know, blowing up their drums. So he would break a screen and then he'd take another one and just put it up there. So you don't have to be a nutty trader, but you have to be a little bit crazy. You have to, because what are the elements of trading? And I have to say it because these are important things. I know somebody's like, oh, I know what the elements of trading are. You know, you look at a chart, you look at the news. No. The elements of trading charts, I'm going to put CH, a basic knowledge of fundamentals. I'm just going to put them as FD. Speed, which most traders don't have. Next one is adaptability. You have to adapt to the situation that's in front of you. It doesn't mean you have to be adapting every 5 minutes, but just in general, if there is a big fat red candle that takes out bearish engulfing, you're not going to stay long, obviously. So adapt. And what is the last one? Anyone chime in? So trading is, you know, charts, the fundamentals. You have to be very speedy in managing profits. You have to adapt to the situation in hand. What's the last part?
Manage your emotions.
Nope. Well, actually, the speed and adaptation is yes. I will add that. It's emotions, obviously. Emotions is key. Now, that's a good point. I will not throw that out. But what is, I would say, a good 30% of, so if all this is 70%, this is so important, right? I'm telling you guys, you know, because I do this all day long. This is what I have to live by, because if this is taken away, what the hell do I do? Drive an Uber? So what is the other 30%? Vic, what do you think?
News?
No, the fundamentals captures the news. Anyone else chime in?
Yeah, I think I know. Don't SOA. You got to act.
No, that I know. That's speed and adaptability. Yeah, you have to. Yeah, so that's great.
Right place at the right time.
Right place at the right time. You're close, man. Brian, get your wings out there in your first major session. Say it. You're so close. What's the word?
Luck.
Thank you. Thank you very much. And God damn it, that took a lot of pressure off me. Okay, you're absolutely correct. 30%. And I did actually put numbers on this, because I've actually put numerical numbers on some of my models, which are mine, so I can't really show them to you, is luck. In some cases more. Pure luck. Thank you. So the luck factor is very, very critical. You wake up in the morning and you're like, oh, you know, everything's looking great. There have been so many instances, and many of you will relate to me, where my chart setups on the S&P 500 is fantastic. Wake up in the morning, frigging S&Ps are down 15 points because Draghi basically woke up on the wrong side of the bed. And Renzi in Italy, Renzo, right? That's his name. In Italy, basically said half the Italian banks are a bunch of crooks, which we know they are. Italy is a completely mafia country. Beautiful place to visit, right? Amalfi Coast, all those places. Bunch of complete bandits, all of them. So the bottom line is luck. Yes, you're right, luck. So how do we manage the luck? We cannot manage the luck. That comes from your inner strength. That comes from your belief that whatever happens, you will adapt. So if you have S&P call at 8 and it opens at 3, what do you say? My luck's completely out of the way? No. You look at the tactical charts. That's why my charts are so critical. Then you say, okay, if this is going down 3, I mean, that seems like, you know, that's a tradable low. You add here. So let's say you had, I'm taking the lowest common denominator. Let's say you had one call at 8. That's $800. You're down to 300. What do you do? Take it, you know, just want to jump off your chair and fall, you know, in your office, or if you're a full-time trader and your wife says, what the hell happened? No, I just wanted to jump off, you know, feel good. No, 300. What do? You average cost down. You buy one more here. It slips down to 2. So now it's, you know, So you buy maybe one more. Now, all this is predicated on the fact that if the charts are cooperating. If they're not cooperating, you want to sell all at 3 and go short. That's where adaptability comes in. That's where I, as you guys all know, if I see a real, there's no like straightforward answer, but when I see a high probability of the market just, coming down, bouncing a bit, but it's still on a downtrend based on my quad charts, I will say short the market. We just did it last week. And Corey gave me the, like you said, Corey said, you know what? You really got, know the craft of the market. Beautiful compliment. I appreciate it. Yes, I have a craft of understanding charts. I don't know if I have a craft of the markets, but the point is, yes, I do. And those calls went from whatever they were. They just flew off the door. 80% or whatever. But then the markets turn. So the point is that as long as you're trying to understand the charts, then you lower your cost down. So let's say 800, 300, 200. So at this point, you're 1,200 and you got 3 calls. Your average cost right now is 4. You see the tactical low. It goes up to 6. You just made yourself 50%. Is it that easy? No. Does it happen a lot? You all know that. It happens a lot. So that is something. So when it comes to the luck factor, yes, look, you go to bed and you go to bed and then you get up and you're like, you know what, the market's looking great and Amazon's, channel looking great. What if Amazon opens down here tomorrow? Sometimes you got to cut the loss. Sometimes you got to say, hey, that's the real, and that's where my job comes in. I say, okay, this was where the stock broke out at. This was the big, 7848 was like the big sort of powerful breakout, as you can see here, right? This was the big powerful breakout. So if it falls down here, that should bounce from there. Because remember one thing, Amazon is a very well-loved stock. They are not going to, somebody please mute the microphone. It's getting too loud. So it'll bounce from here. So that's my job to basically put those alerts out and do whatever needs to be done. But thank you for answering that question. A lot of it in trading is luck. But in order to contain the luck and prepare for it, you have to understand you do have to understand the mechanics of what's going on, because the market is driven by complete machines. So let's take a look at one other thing here.
Hey, Frank, let me ask you something on Amazon if I could.
Sure.
So from a fundamental and everything, you're looking at Black Friday, unbelievable. Towards the end of the year, Christmas coming. We're looking at Cyber Monday, great.
Yes.
So it fell. Let's assume you did not own it and you saw it today. Is there anything that you would have sat there and said, hey, I'm going to short this thing? Because why would someone have shorted it with all that great news just knocking on the door?
Okay, so here's one piece of news that came out the other day. Amazon cut prices on their AWS. This came out on Friday. Okay, Amazon cut prices on Amazon Web Services, which is a significant portion of their business. Everyone likes to think that Amazon is just a retail operation. It's not. In fact, they lose money on retail. You know that, right? Like the reason why we shop on Amazon or we get everything on Amazon, like in your sleep, your Amazon app is going into your brain and you're like, okay, I want that storage drive, and it's just, seriously, Amazon basically does not make money off their retail operations whatsoever. So whether Cyber Monday is, unless it breaks like out of control numbers, they're still not making any profits on it. Just so you know that. Amazon's biggest profit center is their Amazon Web Services. They host every single web server for Facebook, for Google. Even Google uses Amazon. How about that? Okay. All the major, Pentagon uses it, Department of Defense uses it, Amazon Web Services are big. There was a news alert on Friday, which I did post too, that Amazon supposedly cut prices. They haven't confirmed it on their Amazon Web Services. That could have been one of the reasons. That could have been one of the reasons why the stock, went down today a little bit. The other reason could be that pure market making stuff. They knew that people would be very excited with Amazon's online sales, which are going to be huge. No question about it. Amazon's numbers for online thing, they're not going to fall short. Now the question is, will they hit the marks that the most optimistic numbers are showing? We don't know. That's the fundamental stuff. I've worked on Wall Street for a lot of years, believe me. Bigger firms and two smaller firms, one smaller firm. And I'll tell you one thing. They are not clueless, but they don't know either. So that's why I rely on what I'm seeing. So Amazon Web Services could be an issue, but saying all that, I'll go with the basic simplicity of it. They are going to make so much money. Oh, the other thing was a DHL strike. Remember I posted that? Everyone remember that? Yes. So DHL strike, which is over, the judge basically said, you know what, get back in there because you're basically breaking the contract, pilot strike. The DHL strike alone, that itself was also one of the things that got to hit the stock because DHL delivers the Amazon, packages. So they could be delayed and they could have it, remember, every hour delay is costing them money. And the judge said, you know what, that all the service providers for DHL, you guys got to get back to work. So you brought up a good point here, and I want to explain this to everyone, okay? And I'm picking Amazon as an example. We could sit here all day long and try to dissect the fundamental news and what Kramer said or what we think or what, we love Amazon, it's a great company, blah, 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 okay? And but it doesn't mean anything. The reason is somebody out there always knows something more than us. So what can we rely on as retail warriors? And that's what I excel in the Clueless Day trading service. We rely on some real tactical stuff. So let's analyze this very, very simple on a technical basis. What is Amazon doing? And then this is a daily chart. And I'm drawing it right in front of you. Okay, right in front of you. A little bit lower. Okay, watch this. You guys can do this on your own too. So this is why technicals come in so handy. So what is this thing actually doing? You have a multiple pattern scenario here. Can somebody tell me what this pattern is? Please, I showed
inverse head and shoulders.
Absolutely, sir. Thank you very much. Okay, and everyone should know this by now. This is a pure inverse head and shoulder. Stock could easily drop to the bottom of the channel, which is around 755. Why is Amazon showing 767 on my other screen right now? That's weird. That's weird because the stock was down. It shows 767 on the quad screen. Very interesting. Something is wrong with the print. Okay, so that's inverse head and shoulder. You can also look at it as a pure cup and a handle. Both are valid forms. Things change. Things change. And that's what we're like, we're praying, and then, oh my God, it's all over, is if we break below the 753, 755, I would say 753. Because remember, all these big stocks are very choppy. We have to know it. We see it, but for some reason our brains don't want to don't like it, so we don't acknowledge it. These stocks can move $5, $4 like within seconds. Price line could be down 7, 8, because what you have to rely on, look at, is a percentage move. If price line is up 1%, that's up $15. If you're like, wow, Priceline's up $15. Whoopee, it's up 1%. Priceline up 2%. That's when you know something's big is going on. Amazon down 1% is down roughly $8. Amazon down 2% is roughly $16, right? Well, we're close to it today. So when you look at percentage terms, when you're playing these big momentum stocks, and that's one of the last things I'll cover before I open it up for Q&A, is you have to understand the type of stock that you're trading. So looking at this thing here, even if it drops down to 755, 754, yeah, your options might go from, let's say, 6 down to 3, but it really is not changing the nature of the actual chart. If we break below this, I'm not sitting around snoozing. I'm always on the ball. I'm alerting you guys, like everything. You have to take your own action. We break below this channel. We do have support at that 754 level, this white line here, which is the 150-day moving average. That's when we start getting. If it breaks below this, I'll short the crap out of the stock, because that means it's going to go all the way down to to the lower Bollinger. That's around 726. That means something has really gone wrong. So aside from that happening, on a daily, which is not really a trader's friend, it's simply to show you the bigger picture. This is simply a large, it's a consolidation channel. It's a inverse head and shoulder that Corey correctly pointed out, and it's a cup and handle, which should, on an optimal basis, break out, and I would be happy with 803. Oh, I'd be very happy with 803. Okay, so can that happen? It can sure happen. On a shorter term basis, I showed you the multiple charts that I posted today, and this is where we stand right now, which is simply a smaller version of that cup and handle that I talked about. And my quad charts were very clear on Amazon. We'll go from there. Let me just show you one other thing, which very, very important, which is a chart that I posted, which reminds me, guys, stop being lazy. Well, some of you are, okay? And for God's sakes, I do all the hard work of putting the charts out there. The charts are not going to be correct every 5 minutes or every 10 minutes. But God damn it, they're correct, I would say 90% of the time over the next day or so. So take advantage of it. Let me do the hard work. You do the hard work of checking them and understanding what I'm saying, okay, on those charts. And I mean it, because you know what? I like you guys. You know, you guys are good. And that reminds me, how about some referrals for a change, all right? Seriously, you know, get there, get the word out. So when I put this thing down today, it wasn't like a sarcastic statement. I said SPX traders terrified. Barely up 6 points from the August 15th levels. Look at this. This was August 15th. This is where we are. This is where we were on Friday. And we consolidated a bit, right? Does this really look like we're like overextended, like some of these guys, these hardcore guys just say, oh, we are really overextended, it's all over, you know, we are just frigging 6 points higher than where we were on August 15th. What's the big deal? Oh, we were at 2060. In fact, you know, we were actually lower after hours. But we jumped up so much, and it's like, you know, really big. Look, of course there's going to be tactical consolidations. But I'll tell you one thing. In an uptrending bear market, which goes up in, these are called impulse waves or breadth thrust, where you just go, boom, correct a little bit, boom, more, correct a little bit, go up, correct a little bit, and it's going to go up a little bit more. I'm not saying to the moon. I still think we're going to get to 2220 or so by the end of the week, by the first week of December. You know, a couple of days. The big drop is coming in January. We'll have a correction mid-December. Can anyone tell me why? Aside from the fact that it's the middle of the month.
The Feds are going to raise the rates?
You got it, brother. Absolutely. There's going to be nervousness ahead of the Fed. Absolutely. And God help us if the Fed doesn't raise rates. We're going to fall more. Because they are at this point handcuffed to raise rates. Unless there's some really terrible, terrible economic numbers. You're right. If they don't raise rates, we're going to fall. If they raise rates, we're going to get a tactical correction. And then they're going to jam the market. Just like last year. Where's the Santa rally? Market sucks. First part of December was really like bad. And you guys can look back at it, okay? And then the second part of December, the markets just went berserk. So here we are. Let me just focus on one point. I know I deviate once in a while. There's too much info in my head. So everybody's so frigging terrified. We're up 6 points from the August 15th levels. End of story. If we're up 30, 40 points from the August 15th levels, okay, S&P point, that's when I say, okay, we're really, really, really overextended. We're not. Sometimes you got to keep it simple and stop listening to all the talking heads out there and all the so-called, this and that. Tactical corrections, absolutely. I'm there to warn people. I'm there for intraday pullbacks and stuff like that. But as in a real, like sort of 5% correction, we're not there. We will be there from higher levels. So let's look at another chart. This is an important one. What's the most important part of this chart? And I'm using this as to help everyone. I already wrote it out there, so it's not like people have to really dig through their brain. Oh, what's he talking about? So I'm asking you to repeat. Brian, you're new. I want you to answer. What's the most important internal indicator on here? And all you have to do is read English at the bottom. What does it say?
The McClellan oscillator is oversold.
Correct. When the McClellan oscillator goes below 200 on a 1-hour chart, feel free to buy with both hands down because there will be a tactical bounce no matter what. McClellan oscillator goes to 300. Tell your wife you're disappearing for 2 days and you're going to frigging just put enough money in the market and make enough. And Corey knows that. He'll validate within the first 24 to 48 hours. You will make the most you'll make in a long time. Do we all do that? No, we don't. Because we're all so careful all the time. See, the difference between trading and gambling in Atlantic City or in Vegas, right? Anyone seen Ocean's 13?
Of course.
Okay, that's good. Anyone knows what I'm talking about? Somebody said, no, I don't know what you're talking about. You're still going to be American if you tell me if you don't know what Ocean's 13 is, It's a Jacques Cousteau thing about catching sharks, in the Mediterranean. Ocean's 13 is about Ocean's 11, Ocean 13, hardcore gambling, right? You see what those guys do there? That's real out of control. There's no quantitative stuff. Yeah, you can, you can basically count the cards. You can watch the dice. You can see the, the dealer, what hands he's dealing. It's still way too much luck. It's more than 50% luck. The best minds gamblers in the world still know that their quantitative analysis, their card reading techniques and all that stuff is not more than 40%. 60% is still luck. They don't look at a McClellan oscillator. That's the beauty about trading. You can actually look at certain things and say, okay, I can actually make a calculative bet that, okay, the market's going to bounce from here. So when I saw the McClellan oscillator, and I didn't think it was going to go down that fast, we went down pretty hard, pretty fast. Multiple indicators. Want to understand all that stuff? I want to remind everyone. I keep on doing these free webinars. I will, of course, do them for the benefit of my members. But the advanced coaching sessions, many of you have run out of your 5-pack. Sign up. It's worth it because the internals and really getting into the nitty-gritty of it, the way I teach it, nobody will teach you like that. So if you think it's worth your time and a few extra pennies to cover the cost of doing all that stuff, do it. And that's my only marketing pitch for tonight, all right? Aside from the fact is, please Spread the word and get referrals. So when McClellan oscillator gets to minus 283, don't sit around and snooze. You got to buy the market because it's about to happen. If it slips a little bit lower, let's say for the first part of the day and stuff, sure. Then you got to add more. Or if you haven't been in it, then you add there at that time. Here is something interesting that I found out. This is called recognizing actual major inflection points. This was, what was this Wednesday? Come on, I wrote it down, guys. You guys read English or no? It's called post-selection, okay? This was Wednesday. We got down here exactly the same level. It shocked me. It shocked me. We were down on the McClellan oscillator. This is the internals. This is the heartbeat of what's going on underneath the price levels that everyone watches, which I keep on saying. Don't just watch prices. Watch the internals too. We got down to this minus 283 level that we were at right on the morning of Wednesday when the markets opened down 150 points. And if you remember that, remember we opened up Tuesday morning, we were still down like 150 points, despite the fact that we had done a U-turn from being down 800 to being down 150. So when you see something like that, what does that tell you? What is this technical event called?
Positive divergence.
Yes, thank you very much. Vic said that, positive divergence, right? You're absolutely correct. Now, what is positive divergence? It means when prices are, in this case, positive. Of course, we also look at negative divergences. When prices are up significantly, okay, significantly, yet the internals have retested the same lows, that's known as a positive, just using abbreviation, divergence. What is a positive divergence? It means that the big money did not sell out completely. There was capitulation, mini capitulation in the market. Divergence. There you go. Okay. Higher prices, deep oversold levels, similar to post-election day Wednesday. If I was completely nutty and I just completely was technical and did not believe in anything out there, I would be like, holy cow, this is the best thing next to winning the Tennessee, whoever the guy in Tennessee is that won the lottery. Some guy won the $400 million, right? You guys know that, right? You guys know or no?
No.
Well, now you know. He's somebody who's our member, by the way. I'm not kidding. He just cleaned out $267 million after taxes. He's a Clueless A trading member. And you guys know him. And he lives in Tennessee. The numbers were 16, the lotto number, 17, 19, 21, 37, and 44. What is 44? Adds up to 8. It ain't me. I don't live in Tennessee. I wouldn't even bother doing this session if it was me. Just kidding. It's a Clueless A trading member. He picked 44. And he won $400 million. Heck, you don't need to know technicals when you win that. Pretty amazing, right? How can you have your sequences 16, 17, 19, 21? A sequence of a binary incremental number of 2? Well, 1 here, thing. You think this is rigged? I think it's rigged. I'm tweeting out right now. It's all rigged. I think the whole Powerball is rigged. Guys, 400 million, okay? I don't think many people can count that. Okay, is everyone just on the floor right now? You're going to find out who it is, and he or she is in the chat room once in a while, by the way. Okay? All right,
Okay.
guys. I know you guys are like floored right now. I was just kidding. Okay, it was a joke. All right, let's move on. So it was a joke. All right, just want to get you guys moving a little bit. You know, get your blood boiling. All right. So positive divergence here. Boom. So this is definitely a plus. Another chart. It was a joke, guys. All right. I just had fun doing it.
What is the joke?
That's pretty good, actually. I like that joke better. The joke that the joke that somebody in the room actually got the 400 million. You know. So here is another one. Okay. The IWM went berserk. Went way further than anyone can imagine, and I kept on showing it. But still, you know, I mean, I did say 1350 on one of the last sessions and stuff, but still, it went way out there. So right now, these patterns look tradable to me. It can slip to 131.60, which would be a real buying opportunity. And I think where we are right now is also a great level to trade that. Now, can somebody tell me by looking at this chart? I've explained this before, but for some of you hearing for the first time, why is this a powerful, short-term, maybe for 3 hours, 4 hours, tactical trading opportunity where you can make yourself maybe 60%, 70%, possibly a double, based on the charts? Why? Does
It moved outside the Bollinger Band.
You
So it's
are
gonna
the
come
best.
back up.
You are the best, man. Corey, you're picking up, man. You gotta keep doing it. This is great. Absolutely. One of the key things, like Corey pointed out, okay, you shoot out, way out the Bollinger. Remember, this is the Bollinger Band. Thank you, Corey. So you do this. This is your Bollinger Band. Now remember, try using quad. I know I keep on pushing it, but it's worth it. Believe me. Try it out for a bit. You'll see how you can enhance your trading to a level like you haven't seen before. I mean it. I don't have any benefit from quad. I'm still paying much more than any of the referral rates, which is roughly about 120 a month or whatever. Use their platform. You can. I use their whole platform for my quotes and everything. Very easy on the eye. You love it. You love it. Do the trial thing. Just, you know. And if it's making you money, then you keep it. Just like anything in life. If it's making you money, keep it. So this is a quad platform, as you can see. Well, the Algo HFT, I call it. Because I feel that a lot of the prices coming out, I see movements on it earlier, my opinion, than what I see on Thinkorswim or any platform that I'm using. So way out the Bollinger. This is also known as capitulation. Big fat red candle, like see you later. You know, it's like it's never going to come up. At the same time, you are looking for inflection points, right? You can do this with any stock too. There's your major inflection point. This was the same way, broke down completely, looked like it was going to go there, didn't go there, and then bang. That's the nature of the beast. And how only way I can identify it is you look at the fast stochastics, deep oversold. Slow stochastics in this case were not deep oversold. In this case, very deep oversold. That's great. They're getting the market deep oversold on a week that they're going to, in my opinion, blow the market higher by Friday. They want the market to print a solid number, in my opinion, for the month of November. And of course, you get a general positive bias for the first 5 days 5 days of December or any new month, because that's when the mutual fund and primarily the pension fund monies enter the market. They are mandated to do so. Given the positive and good feeling in the market right now, don't you think they'd be more open to doing that? I think so. So the first week of December, I think, is when we really peak in the market. And the second week with the Fed meeting and everything that Corey mentioned correctly, and you get a natural pullback. The Fed's not going to destroy the market. There was an excellent article in CNBC by Jim Grant, Grant's interest rate observer. He's no a fan of Yellen, but he thinks that the Fed is going to continue to do, even with the new replacement for Janet Yellen, which is coming in 2017. Trump will put a new person in there. He mentioned somebody, I didn't know the name. They're still going to be very expansionary. They're still going to be printing money because of all these infrastructure programs and all this stuff that's in place, which are very needed, will require higher debt levels. That's what's going to happen. Anyway, so saying all that, we are at a pretty big inflection point here. So IWM calls, which matter to us, let's say they are at $2 or $3, you could get a nice solid technical bounce back into the Bollinger, which you will get. And they could go up to 5. They could go up to 6. Right? Simple trading. You don't have to get overcomplicated. So this is something that you got to keep in mind, because here we were at 134, 135. This is IWM, obviously, not the RUT. Well, same thing. So let's say we slip to 131.06. My arrows are right there. That would be a fantastic buying opportunity, in my opinion. Can it slip? Yes, it can. I think it bounces first before it slips. Because once you overshoot the Bollingers out like that, it has to get back in the Bollinger. That is a given. That is a given. Now, if the market does want to go down more, the Bollingers are going to keep on expanding downwards, and this will bounce a little bit and then fall again and keep on tracking the Bollinger down. That is a trend change. We don't know that yet, but we'll see. Saying all that, this is extremely positive. The slow stochastics, that's the SSTOC, the bottom column, is that deep oversold. That's pretty big. The slow stochastics get oversold pretty fast on a lot of things, right? We know that. But the slow stochastics getting this oversold, either things are really falling apart or things are just starting to, you get a phenomenal buying opportunity. Look, I'm not saying it's just going to go from here and bounce all the way up here. No. I'm simply saying that here is the pivot, 134, roughly. You are well off the pivot. Can somebody tell me what this distance traveled is what it's called in technical terms? Away from the moving averages?
Standard deviation?
Thank you. Simple statistics. Standard deviation. You have a bell curve, right? If when we talk to statistics, you have the median. So if your standard deviation is well off that, you will revert back to the mean. It always happens, always, even in a downward trending market. So here we have a tradable opportunity to do pretty do well. I also drew these red lines here, which is a megaphone pattern. So on a really sharp move up, that's the max that you're going to get. And if it blows out above that, well, anything can happen. You know that, it's market. But this is really positive. Anytime, I want to remind people, you see my charts on the quad, and I do try to write it as much as possible, say that it is all the way down here. That is, generally speaking, a very powerful buying opportunity, period. Because you cannot go below 0. Remember that. So you'll get some sort of tactical bounce. Catch it, make money, and then decide whether or not it's a short. Okay. 1 second here. Let me see.
Hey, Frank, look at that chart that you just had up. It looked like from all the way from the bottom to the top, it hugged the upper Bollinger Band,
Yes.
and the middle one, once it touched it, it bounced off it. Maybe something we could learn from something like that.
Well, remember one thing. On an uptrending market, you stay above the mid-Bollinger. On a downtrending market, on a corrective phase, you're below the Bollinger. What I'm talking about, and agreeing with you, is that I am not looking for a bounce above the mid-Bollinger. I'm simply basically saying, hey, even if we get a bounce up here, or even if we get a bounce into the uptrend line, which is this uptrend line that I drew over a short, over a short time period since the 15th, right? You're still going to make a decent sum of money. So that's what I'm talking about. Now, if it crosses over the mid-Bollinger, that means, it resumes the uptrend, and that means it's going a lot higher. So again, here is something very important that I want to point to everyone. I'm keeping everything pretty close to the vest, because we could have a very powerful correction for no reason other than a tactical correction, which can happen in the middle of the night, and or just happen from nowhere. So whatever trades you're doing, don't go overboard, because we are up quite a bit, as I've shown repeatedly. Here's your channel on the S&P 500 on the E-minis. Here's your red line support. Here's your first level of support. If we break this channel, we're going to move pretty fast. Point is, we have come a long way from here. We are not too far from where we broke out of, but just like any other rising wedge, you could get a consolidation back towards the 2180 level, which is going to freak really freak out people, like, oh my God, unless they're tactical. We could get down to 2180, and then from here make a sharp bounce. That's what bull flags are all about. Strong markets, I want to remind everyone, powerful bull markets, as we're going through, do not end in one day. It's a topping process. Just the way when markets are completely crashing, everyone's like, where's the bottom? Where's the bottom? I used to kid around, like, when you stop asking for the bottom, this one is going to go up. And it creates a rounded bottom and then moves higher. On the upper end, it does the same thing. It keeps on creating a head and shoulder, this and that. Then all of a sudden, a jerky move up. And it was like, oh my God, this market's going higher. No, that's the time to basically keep trimming your profits. I don't know if we're at the lows yet. I mean, if we have hit the highs yet. Yes, I keep on showing like 2210, 2220, but this market could go higher. Imagine how many sectors. Can you give me one sector that has not even come close to its highs? Somebody, aside from Corey. Corey, don't answer. Please don't answer. Somebody tell me a sector which is far from its highs, which can drag the market way higher, especially on the Russell 2000. Oil?
Energy and oil?
Energy's one. Energy's one, absolutely. What's the other one? Come on. We trade some of the stocks in that sector. Powerful sector, real companies. U.S. exceptionalism. The best companies in the world in that sector are based in the U.S.
Biotechs?
Thank you. Thank you. Biotechs. Look at the biotechs. Stocks are like, they go up $1, we get excited. They go up $3, we get excited. Regeneron runs $3, $4, $5, like, oh my God, it's a tactical turn. Guys, when the real turn comes in that sector, especially with the big boys, it's going to go ballistic. And of course, I think this Illumina, something's going on with that stock. 8, 9 points, I think pretty easy to get. Certain days you get this certain picks that move out really big. Yes, biotechs, energy, even banks. We are way off the highs. The only sector that's close to the real highs, to be honest with you, is technology. So that's what I'm saying. No one thinks about these other. I think the market gets fully valued, like really fully valued, I'm going to show you this before this. When all sectors kind of like all of a sudden hit the acceleration phase, that's when you know there's nowhere to go for any cheap prices. You can still find some real bargains on the biotech sector. You can still find bargains on the bank sector, even though it's moved up. Bank of America, keep on showing the charts. It's good for $22, $23. Those lotters will go crazy. So another thing I want to point out is I keep on showing these charts every day, and especially for new people like Brian, when you're looking at this stuff here, pivot, very important. Algos and compute and these high frequency trading black boxes are designed to buy above the pivot hard and run it up. Somebody says, how far can they run it up? Well, look at the chart. I have a marker here. I don't do this for fun. I do it to guide everyone to where they can see. 9 out of 10 times they exactly hit that. Upper end of the Bollinger is this 221.72 level or 221 whatever level. Here's your pivot. Very important. Look what happened today. Hit the pivot, acted as resistance. So once you if you want to trade, like when we're trading those SPX calls, they went from like 6 to 9.5, 5 to 9.5. Pretty damn good trade. If I gave you a stock at 5 or 6 and it went to 9, you'd be like doing backflips. So why not do backflips on doing these options? You don't have to do much. By one. So I saw the candle developing. Second candle developed. I even put it out there. Sold 70% of my position. That's just a, that's just signals. Like, okay, whatever you got, like take down most of your stuff. Because I saw it approaching the pivot. I did not know if it was going to break the pivot, and it did not break the pivot. This pivot acts as major resistance. Guys, get used to this technical stuff. Start thinking like a robot. It's not that hard. Trust me, it's not that hard. You don't need to be a mathematics person. You don't need to be somebody who's like really smart about the market. Just, I'm doing the hard work of showing the charts. Just frigging follow it. Every single line means something. I drew this megaphone here, right? This one. You're going to find support here at 220. What did the thing close at? 220.48. It closed down here, somewhere around there. These charts are telling you something. I'm not painting these lovely cloud, okay, Bollinger cloud. They're automatically been generated. So all you guys all got to do is focus on these charts. And I'm taking the time and the patience in the middle, of the night, past 10:30, my time, explaining this stuff. So have respect. And I'm not saying you got to like ditto everything's going to work in every 5 minutes, but once you start following this, you feel more comfortable in what you're doing. It doesn't mean that you're going to have every single trade a winning trade, but in general, your trades are going to be much better to manage, and you won't sell out too early, you won't panic and sell, blah, blah, blah. If I see this, here is the thing point, bearish point. If you see Bollinger's turning down like this, that means big money selling, and we're going to be down here real fast, if not lower. Now, this is a shortened version of the chart, not going back to the lows. But all you got to remember, the pivot, extremely important. You want to trade fast, 15, 30-minute trade. Look to see this first candle develop. And again, I'm doing the hard work of showing it to you. All you got to do is have the discipline to follow it. We don't know if the second candle would develop. But then the second candle bounced off this dotted blue line, which wasn't put there to make the chart look pretty. It was there to show you that we need to hold that. Whatever the case, you start to see the second candle develop. Where do you think people get excited? Right here, right up here. This is when I see excitement in some parts of the trading room. Oh, really excited. Well, guess what? They got smacked because they got made a little bit, hit the pivot, and then bang, the sell candles came in. So that brings me to a very important point. Look, a lot of you have full-time jobs and stuff. I know you can watch the market like I do, surrounded by my lovely screens and feeling the warm glow of red candles and green candles, right? I understand that. But I am doing a lot of the hard work for all of you to at least glance at whatever you're glancing at. Because if you don't have any access to charts, please do not trade intraday. Just don't. But if you have access to charts, and the simplest way of doing it, which I find to be the easiest way if you have an iPhone, is investing.com. Candles are very clean to read. I even post some of the charts off my mobile phone at times. You know that. So that's it. Just use investing.com. You can see the candles develop and not develop, match it with what I'm putting out there, and do what you need to do. But if you think that you're going to trade SPX or RUT calls and puts and just walk away and come back 2 hours later, ooh, whistling, and then whoops, you look at your screen like, oh my God, why am I down that much? Well, get off that stage. Do not trade SPX, RUT, calls and puts options if you're not an active trader. They're very lucrative. They're just like futures trading. If they don't go up in a straight line, they don't go down in a straight line. They follow exact levels, which I put exactly. So hit pivot or close to it, you sell. Did I wait around to sell at 221.36? No, I was out pretty much right around here somewhere. Good enough for me. Depending on the size of the trade that you put in, take your winnings. Walk away. Because the next candle that's going to come, it could be up here or it could be down here, which it was. We don't know that. Looking at these internals doesn't tell you much. They're very, very strong. They're still above 80. In this case, still above 60. The fast stochastics showing strength. The slow stochastics are still in that overbought zone, which is not necessarily bad. That means that they are going to keep the market higher. Just because it gets up here doesn't mean it's going to correct. It did correct. We saw that. It corrected fast and then bang, it came back. So all I'm trying to say is I'm putting a lot of really specific charts out there. Try to understand them. They're not that hard. Believe me, anyone can do it. And I mean anyone can do it. But try to match that with the stuff down here with the markers. And you need to have some access. And the fastest access that I can suggest is investing.com. Tracking the futures or SPX. That's basically it. I'll answer one or two questions before I blow out. Yes, Corey, go ahead.
So Frank, on those two green candles, where did you first buy it? At the start of the second candle?
I basically bought it by matching the slow stochastics turning and the lower Bollinger right here, and that's when I alerted people to basically get in there. Yes, I pretty much caught the bottom on this one, okay, because they were a perfect match. You have the lower, I'll get the thinner thing. You had the lower Bollinger, right? Remember, the Bollingers are simply giving you a directional view of the market. Look at the Bollingers. They're not they're still uptrending, right? So when I saw it hit the lower Bollinger, and this is on the hourly chart, I saw that the slow stochastics were starting to turn up, and I posted the same charts, and that's the beauty about my service. I post the same charts that I see on a very timely fashion on the real-time feed so others can see the same that I'm seeing. Then they have to make their own judgment what they want to do. So yes, so it was pretty much right close to the bottom. If I saw yes, go ahead.
And then you added more on the second candle?
I added more as I saw this candle develop. That has partly to do with your gut feeling. More importantly, it had to do with the fact that the slow stochastics were crossing over. The minute you see the slow stochastics crossing over, this applies to individual stocks too, ladies and gentlemen. You need to add. Yes, you might buy it and it might go down maybe at a few cents or $1. You know what I'm saying? It doesn't matter. If the slow stows keep on curling up, it is going higher. On the second candle, I bought it pretty much on the right above the upper megaphone, this blue line. And remember, I'm sharing this constantly with you guys. That's why you're seeing it. And then as it was approaching pivot, I always get not nervous, but the things were around like 580, 570. They were already up to like 650, $7, $7.50. That's a pretty fast move, and I post that. So you got to determine what you feel comfortable taking out. I felt that given this large red candle, we would probably not break the pivot. I felt that we would not break the pivot. Now, was it simply because I was looking at the SPY? No, because I was looking at the overall markets. And the overall markets weren't like ready to go gangbuster, right? So if we had broken above pivot, Corey, we would have one of those days where we were down 50 and then up 50 to 100. But I didn't think today was the day. So again, as it's approaching the overbought level, and so I was out a little bit early. But yeah, so that's it.
Hey Frank, Vikram here.
Yes.
Do you see the candle spikes? Do you really analyze those things, or?
Do I analyze the candle spikes? I analyze it in my own way. The candle spikes are simply exhaustion highs, and the algos moving in to take profits. Analyze it? Analyze it in what sense? Like
if you see the spike, whatever we got today, it shows like the market may go down to 219.10 or 219.
Yes. No, yes, I analyze the candle spikes to the sense that this could be construed as a what I call a spinning top or naked bar, right? Let's look at it real time here. 1 second. So let's look at the spies. Now we're getting like, into technical stuff. So let's look at this, for example, on the 1 hour. This is the spies, right? By the way, that's a misprint. I saw that earlier on. So this is just one of the charts I'm using. I use, as you know, I use this one quite a bit too. And I will download one chart that I use, which is a channel, right? And I've shared that with you guys too. So I'm looking at multiple charts at the same time. So here's a channel chart, and you can see here that I had shown that this was early in the morning. If you guys recall, I had pre-market, I have given you guys a range of what I thought was going to be the S&P 500 range. Anyone remember that? And that's why it's so important. Again, I'm not picking on anyone, but it is so, so, so important that all of you glance at my charts pre-market before you start trading. I think it might save you a lot of money, and if it doesn't save you money, it's definitely going to, I'm trying to bring it out. Hold on. It will definitely help your head. No question about it. So I'm just trying to get that chart. Hold on. Okay. Where is the S&P chart? Bear with me 1 second because I want to wrap this up. Okay. Okay, so here's my Twitter feed, right? And so if you look back at the first part of the day, going back, I always put a range where I think the market will trade in based on my estimation. So this was one. Okay, this is pre-market. And this is exactly what happened. 2,200, and this is where the market was. All right. So make sure that early part of the day when I'm posting my pre-market charts, which I do it as a regular on a regular basis, you guys take a quick peek at it, because then you'll have an understanding, despite the volatility, what the market might do or not do. So here was another one. If we broke this, we would fall down here. And so in answer to your question, Vic, this is the level you're talking about, right? The 2191 level?
That's right.
Yes, and that's a big possibility. That's a big possibility, absolutely. And that's why I stuck to a little bit of the Russell 2000 calls and not push anyone that hard onto the SPX, even though my other factors, including the McLaren oscillator, is telling me that we could have a very sharp rebound at any given time, given what's given how deep oversold we are. So it's a different, that's one of the things I just want to remind everyone, that we cannot always tell, because there's so much overnight action that we can determine what's going to happen by looking at what happened, what happened during the day. Just something that is an unknown. So we can't, we don't know that. So looking at the SPX chart here, if we look at the daily, it certainly shows that we are topping. There's no question about it. There's no question about it. But this is a daily topping. So it doesn't mean that we can have a quick tactical bounce before we sell off. I would say that on the SPYs, it's very clear. This was your breakout level right there on the 21st. And that breakout level was 219.63. A test of 219.63 is almost mandatory. A break of 219.63 is not mandatory. If we hold this level, give or take a point or two, and we could bounce really hard. Now, somebody might say, oh, it's so oversold, overbought, we are going to come down. Well, I like I say, just like our appreciation, you got to know like what you're looking at. We could come down towards this level here, where we had the red candle, and then bounce directly off here. It doesn't have to come down here. Once it gets down towards these levels, right, where you have, this is the dynamic momentum index. It's a different indicator. If you get down towards that level, you buy with both hands down. Just so we, this was obviously, right before on election night. Yeah, go ahead.
Hey, Frank, can we see the December time level in the last year, like?
Oh yes, yes. You can see that, and I'll show it to you right now. So this is 2015. I'm going to pull out 2015. Okay. So here was 2015 December, right there. Okay. This was September 28th. Hold on. Right there. So what happened was, if you look at this, just imagine you're not looking at this. Just look at this cursor here. See this huge red candle, right?
Mm-hmm.
So this was off the highs of around 211.65 on the SPYs, and this red candle, and it was just like all you could hear about was like, oh, where's Santa's dead, he's a radical jihadist. I don't know what the hell. They were just saying all kinds of nasty stuff, it was just like, it's over. This is not going to happen. And this was happening primarily because of oil, by the way. I can't remember the exact specifics, but if you look back on my video cast from that time, you can scroll down on the YouTube channel. You hear me talk about it. So it was like all kinds of crazy stuff. And then bang. I did mention that you always get severe volatility, which I'll mention again. And I always remind people, middle of the month. Remember that, right? Always the middle of the month. It's going to be December 15th, close, give or take a few days. It was November 15th, give or take a few days. The same crap happens. Technical resets. Corey put out a fantastic piece one day for everyone to see why those things happen. Middle of the month resets, okay? Technical resets. So saying all that, this happened, and then everyone's like giving up, like it's all over. I looked at it in many different fronts. One of them was that this was the breakout level here. I'm just going to draw some broad strokes. So this was the breakout level. You can see that, right? On this massive dragon bullish, this was your breakout level. I said, okay, maybe it gets down here. It did, and then come December 16th, Then come December 16th, it was just like, see you later. And this is the weekly chart. I mean, in 1 week, the market just took out, almost got to the previous highs. And then came the big January selling, right? After the first week of January, mind you. I'm sorry, 12/7.
It is, I think January 2nd onwards it started selling.
I'm sorry. This was actually November 16th. And one second. I'm just trying to get these numbers in gear. This was November. This was actually November. Okay, this was the big November move. And then you had this move. Yes, 12/21, right? Yeah, this was what was coming down. And then 12/21, you started to get this big move up. My apologies, that was November. And then you went, as you know, into the end of the year. End of the year. Remember, the last 2 days of the year like mean nothing, you know, with the holidays and stuff coming up. And we almost got back to that 209 level, back towards these highs, and then the market basically you know, collapsed in January. So again, remember one thing: last year is very different than this year. You cannot replicate last year. This year, the fund managers are going to buy the market. Unless something dramatic happens, they are going to buy the market. We are in a multi-year breakout here. So that means that we could get possibly 2,300 or so on the S&P if you project it out based on the pure technicals of it. So on the SPYs, if you want to look to, if you just draw some lines, you're going to do this. 1 second. 1 second. Axida, you might want to mute your phone. Okay. So if you draw this line, again, this is just pure. 1 second. I've shown this before. So you are projecting yourself out to 235. And there's a good possibility that you get that, especially based on the monthly chart of what you're seeing. On the monthly, this candle cannot be written off as a fluke. This is real money getting in there. On a final note, I just want to say something. We are on the first stages of euphoria. It has not seeped in. Why? Ask yourselves. Do you feel really euphoric? No. All you're thinking of, and I mean everyone, all everyone's thinking of is, when's the correction coming? When's the correction coming? So this is behavioral economics and finance at its best, okay? When everyone keeps on thinking as to when's the pullback coming, when's the big 500-point drop, the market will do just the opposite. Just the opposite, okay? You're all smart people, and I'll tell you, everybody, and I've said this repeatedly in my simple terms, the bulls are scared, the bears are terrified, and the market will continue to go higher over the next couple of months. And this market will continue to go higher, and traders will continue to miss significant trades on many different fronts, because they will always be asking the same question, and the demons in their head will say, oh my God, when are we crashing? So tactical pullbacks, absolutely. Bear market, none in sight right now. So
hey, yeah. Frank, do you believe the theory, since you came from Wall Street, that the month of December they really try and run it up so they get the highest bonus?
Absolutely. I've said that before. They do that at the end of each month too. Absolutely. Remember, everything is self-interest, right? So they do want to make sure that there's no major crashes in the market prior to year end, so that at least they can get paid. Any business would do. Businesses do the same thing. Yep, you're absolutely correct. And honestly speaking, in capitalism, you work for self-interest. There's nothing wrong with that. Yes, they will hold the market up. And again, remember one thing here. There is a true sense of optimism that the policies going to be enacted by the new administration are going to have some real positive benefits globally. So that level is still there. I just want to show you one thing here, which I did right in front of your eyes. Here are 4 major channels over multi-months. That channel pulls out to 2,700, all right? 270, yeah, around 2,700 on the S&P 500. And believe me, these channels work. We are on the first stage of the channel, ladies and gentlemen. The second channel is over 240. The third channel is over 257. Somebody might say, oh, this guy's like smoking something and he doesn't know what he's talking about. Believe me, I know what I'm talking about because I was one of the very few people who called it correctly. And I mean that since 2009. So this market has a lot more to go. Yes, there'll be big fat correction along the way. But in my opinion, looking at everything that I can see so far, this market has a lot more room to go. So yes, we will be shorting here and there, no question about it. But as in a bear market, none in sight. So that's it. All right, guys. So listen, thank you for attending. A couple of things I want from you guys. Once in a while, we do organic marketing, right? Almost all our members come through referrals. And I know I've mentioned this a few times, but I do want to say it straight and clear. Only thing I request from you guys, throw out a good shout out in some of the other forums, whether it be Stock Twits, whether it be other places. Let people know what we're doing. The more people benefit, the better off they will be. It's a bit of a learning curve. We all know that, but hey, it's good stuff. And it's direct engagement 100% of the time, which you cannot get in any service. Number two, focus a little bit more. Look at the charts, sign up for the ACS sessions. I got a lot of costs to cover to run this service, and I cannot keep on doing this for free all the time. So from a business standpoint, freebies are good, but we're not a welfare society. We're capitalists, okay? And you got to pay for what you get. If I'm doing a good job, pay for it. And I repeat again, keep my service fees down every single month. I could charge a heck of a lot more. Yes, I'll lose a few people, but it doesn't matter. Because the real ones who are making the money, they'll stay and they'll bring in other people. But I don't like doing that because this is not my goal. So referrals, focus on the charts, throw out a couple of good shout outs other places so other people know and they can come in. And that's all I ask. And once in a while, if you're really happy with something, write a nice testimonial, write a quick feedback. That's what organic marketing is, what my service does. So those are the few things that I only ask for. The rest of the stuff, let me do the hard work and you guys need to do what you need to do. All right? So on that note, have a great evening. Let's engage tomorrow and let's see what this week brings. And by the way, there's a lot of economic numbers and stuff coming up, including the GDP, which I believe it's coming out tomorrow. But again, I do not expect, that's my opinion, I do not expect any cataclysmic drop in the market aside from the levels that I showed. All right?
Frank, if you are patient enough, can you show the DE?
Oh, yes, of course. You got a big opponent on your DE short, Kramer. Okay, now looking at the monthly chart of DE, I wouldn't even touch this short as a stock as a short. Tactical short, like you did, absolutely. Absolutely. But the monthly, this stock is going to go a lot higher. I'll tell you where it's going to go. This stock is going to look at the depth. You know, I mentioned this before. Look at the depth. It's $60, $100, right? This stock is literally going to go to $140 on a monthly basis, on a swing. On a shorter term basis, okay, that's a minor consolidation over a big move. Now, this is not a bearish engulfing candle, right? Because a bearish engulfing candle means that it has to be basically larger. It has to be larger than the previous candle, right? It has to be up here and then down here. You could get $100, but I would, in my opinion, look at the volume, tiny. So on even on a daily chart, this stock is suggesting it wants to move higher. Remember, this is one of the biggest stocks that the hedge funds love and the mutual funds. I would suggest that retail traders not try to fight that trend. It does not mean that it can't pull back $2-3 here and there, but the stock is going higher. Okay, no question in my mind. Now looking at the 1 hour chart here, you do have a major support level at 100, and you also have a support level at 101.39. So that's my opinion on John Deere. It's on its way higher, and this massive multi-year breakout this is from 2012, for God's sake, from 2011, is significant. Multi-year breakouts like that always go higher. So just remember that. Yeah. So that's just just your opinion from big, and the big funds bought it. Now, can it come down and test 98 to 100? Yes, it can, but you have to be quick. You have to be quick, because whatever happened today, if you look at it on a daily basis, it was 1 second. It was the volume was very light compared to this. You did the right thing in shorting it because it was an exhaustion top, but again, it wants to reverse. Here is one last thing that I'll tell you the reason why it probably will. The US dollar is starting to now falter. A heavy volume today, okay, on the daily, red candles. So the US dollar will probably come down, guys, which would be very helpful for commodities, oil, agriculture, which includes deer, and of course materials. So the US dollar, in my opinion, for now has peaked at around 102, and that should give some more impetus for commodities to go higher. So that's it. All right. Remember, stronger US dollar, bad for commodities. Weaker US dollar, good for commodities, even though they all went up at the same time after the Trump thing. But just in general, that's how it works. All right, guys. So I'll put this up on YouTube thing. Like I said, referrals, focus on the charts. Let's all work together on all the things that we do. Act and adapt. If things change, I'm going to immediately say change. So, you got to act as quickly as you can. I don't expect any major drops before the first week of December. And at the same time, these YouTube free videos are open to anyone. So if somebody wants to be a little bit convinced about what I say and they see it happen, then tell them to, review these stuff, and somebody who's serious about, making money. And then we go from there. All right, guys?
Thank you, Frank.
Thank you, Frank.
Have a great evening, and thank you for supporting the service, and we look forward to growing to much larger numbers. Thank you again. Have a great evening. God bless. Bye-bye.
Bye-bye.